Hey, what's up? This is Greg. Welcome to the channel. And if you're new to the channel, we talk about business and investment. And today we're going to talk about Snowflake. And no, I'm not talking about the self-entitled, overly emotional people that melt at any kind of criticism that's against their opinions. I'm talking about the stock and the company. And that's what we're going to be talking about. And it's coming your way right now. Hey, so for the past few months, we have been doing a series, should you buy the following stock? And the one that came up on the radar this time is called
Snowflake.
That's right, Snowflake. It sounds kind of flaky, doesn't it? But actually, it is a cloud-based data warehousing company that allows companies with a one-source solution to store and also manage and manipulate data on the cloud. Now, if you've been paying attention recently, even I know this, all data management is migrating toward the cloud, and this has been happening for many, many years. One of the aspects of this is that the public clouds are owned and managed by these very large companies, Amazon, Microsoft, Google, and this particular software that Snowflake provides works with those public clouds and allows you to store data and also manipulate data and analyze data within these cloud architectures. Now, Snowflake is really a startup. It came public in September of 2020, and it came public around 120. It immediately shot up over 200, and it was pretty much straight up from there. It hit a high, in the 400s, and then recently, and this is one of the things that caught my eye, it sold off about 30%, and it's currently sitting around $300 a share. Okay, so what we're going to do on this video is, I am not claiming to be an expert on software or the cloud. I'm a financial person, so I'm going to be looking and analyzing this company as a financial person, and I'm going to try to make some sense of it and make a recommendation to you at the end of the video. One of the things I'm noticing right off the bat is that all these large companies, Amazon, Microsoft, and Google, all have their own applications for this data warehousing and manipulation, very similar to Snowflake. So that right off the bat concerns me. The second thing that concerns me right off the bat is that I was reading that Snowflake's software depends on using the Amazon architecture within the cloud. And that's another thing that concerns me, because Amazon is essentially competing with them for the same service, and in doing that they might give Snowflake further on down the road unfavorable pricing in order to crowd them out in terms of competition. Okay, but having said that, I don't want to be too biased going into it. As a first step, let's go over to my trading account and let's take a look at whatever metrics we can get on this stock to try to do some analysis on it. Okay, so now we're in my trading account, and I think I'm going to be able to dispense with this analysis relatively quickly here, because there's not really a lot to look at financially. So here we have the stock. This is basically what it's trading at today, $305 a share. Looking down, the market cap is $15.5 billion, which is quite amazing for a startup. The 52-week range, after the IPO at 120, it gapped up to 208, as you can see here, and then it shot up, basically every week until it hit a high here of 429, and then, as I said, it sold off since then, in fits and starts, and now it's trading, around 305, roughly 20%, 30%
lower than, in and around the highs. Okay. Let's take a look at the fundamentals, whatever there may be here. There isn't much here to look at. Shares outstanding, 50 million shares outstanding. Now another, I think, negative that I see in this stock is that the float is relatively small, which means that there's going to be increased volatility if any of the large institutions sell. That's another negative. You can see that the floating shares is only 50 million. That is not a lot in terms of the percentage ownership of the entire company. The short interest really doesn't mean too much to me at this point. Now, the only metric that we can really look at here in terms of the fundamentals, there's obviously no earnings. They're losing money. They have been losing money. I heard that in the last year, the sales have increased 100%, which is good. That's a very good metric. But look at what it's selling at, 176 times sales. I mean, that is extremely high, and the growth rate that would have to support that kind of multiple is just astronomically high, and I would argue is unsustainable under any circumstances. Here their sales are 128 million right now. So that's what we have there. Now, I think you can conclude from this that as with many IPOs, this is a highly speculative stock, and it should be viewed at this point as a speculation. Let's take a look at the chart. Let's take a little closer look at the chart. Let me make this a little bigger here. You can see this dramatic jump. Not unusual for high-tech IPOs. You have it coming in here at 120, as I said. It gapped up to here, 260, 270. It bounced around, and then there was another big jump. And these are closing prices. So intraday, I think it traded above 400, but closing price, it was more like 390. And here's what I'm talking about. This is the sell-off, the 30% sell-off that I'm talking about. And you can tell that it rallied a little bit in the last week or so. Okay? This next slide is interesting. I thought I'd just take a look at this. This is what the analysts are saying about the company. And what this chart does is it takes 21 ranked analysts and looks at their 12-month price targets, and you can see how they fall out. This is an average of 21. This is the lows of 250 a share, the middle of 300 a share, and the high of 350 a share. The average price target of these 21 analysts is $290 a share, which is roughly 4% below where it's trading today. I got to tell you, a company that is in a startup mode like this with no earnings, these analyst projections really, truthfully, mean nothing. Okay, so what I would do is just basically ignore them. These guys, while they know the industry and they probably know more about cloud computing and data storage than any of us do, they can't predict where a stock like this is going to go because it's just too early.
There are a couple things that I really don't like about this company right off the bat. I mentioned them at the front of the video, but I wanted to say them again. Number one, who wants to compete with Amazon, Microsoft, and Google on anything, on any level, okay? I know I don't. The other thing I didn't like was that they're dependent on Amazon's architecture in the cloud to operate their operating system. This, I think, is a big risk because Amazon is known for basically crushing competitors, and they have their own application that they're going to be trying to sell people on the cloud. That's another thing I don't like. And of course, the incredibly high valuation is another negative. Okay, so what do we think of all this? I think it's pretty clear, at least from my standpoint, that this stock at this point in time in the company's development is a pure speculation. I do not consider this an investment or something that I would invest in, simply because there are too many unknowns and there's just too much risk out there. In addition to the early stage nature of the company and the fact that they haven't really executed on their business plan yet, and at a valuation of 176 times sales, there's really no room for any mistakes. And if they do fumble, if they do have to regroup, if they do have to change their strategy, the stock is going to just sell off. You could wake up one day and it could be down 50%. That is not something that I would put my money into. As you know, if you've looked at this channel, we're looking at real companies that either throw off an incredible dividend like Exxon, Mobil, and Chevron, or stocks that have sold off for whatever reason, but these are companies like Intel that throw off $18.5 billion in free cash flow per year. This is something that you can analyze and you can really make a decision. Is it cheap? Is it expensive? This is a pure speculation. Now, if you have money that you can afford to lose, and you want to take a flyer on it, be my guest, but this is not something that I would go into. Okay, so now listen, I got a couple videos I want you to take a look at, all right? This one here is one that I recently did on Airbnb. Now, that is also a recent IPO, but there are some really good reasons why I think you should consider it as an investment. And there will be another one up here that will be another one of interest. And I thank you for tuning in this time. And I would love it if you would please like the video and also subscribe so you can be on board for future videos, which will be coming your way very soon.